Hi, I'm Jim Juback, and welcome to my YouTube video for Thursday, June 8th. Before we get to that, we're going to do sort of a spring, summer, cut flowers quiz. Okay, if you look over my shoulder, you can see these, which I assume everyone knows what these are. These over here. These are peonies. When I was a kid, growing up in New Jersey, we called them Pekingese. One of my first lucrative paid summer jobs was picking Japanese beetles off my uncle's peonies. And I think we called them Pekingese because he raised dogs. He didn't raise Pekingese, he raised chows. But I think we got $1 for a quart jar of Japanese beetles, which would come swarming out of the ground about this time in June. Okay, so that's those flowers. Now, these are a little more obscure. These are my favorite cut flowers because they last twice as long as the Pekingese do. So what are these? I'll tell you next Thursday or next Wednesday, next week. You have to wait a whole week. You can send in your guesses. Might even come up with a prize, although I don't know that there is one, but we'll see. Anyway, okay. So if you like this video, despite the quiz, give us a thumbs up. Sign up to my YouTube channel. We're doing 3 a week, not always on the same day. This one is normally the Wednesday video, but we're putting it up on Thursday. You can get more of my stuff on my free site. That's jubackpicks.com, and you see the link to that down below. Even more of my stuff on my paid site, JubackAM. That's 6 portfolios instead of 3. Link to that down below. Also, I'm putting up a new, not a special report, but a new extra on the free site and the paid site. It's a 10 stock core portfolio. Basically, if you're a beginner, this is a good place to start. If you've got a portfolio that's been running for a while, it's a good check. But these are the 10 stocks that I would say this is the center of a portfolio going forward. Not necessarily 10 stocks to buy and forget, because I don't think that actually works in this market and economy, but 10 stocks that really ought to be the core of your investment thinking. So I'll put up a list, and then as we did last time, we'll put up the list, and then you have to go to one of the sites to get the whys for all those. Okay, you'll find a link to that also down below. Okay, today's video is FOMO is back. FOMO is fear of missing out, and it's been around for a while. I mean, the idea is portfolio managers and investors buy stocks because, hey, they're going up and we don't want to miss them. But one of the things that was really interesting to me is a quote that ran on Bloomberg after Apple's announcement of its new VR headset. And this was from Kim Forrest, who's the chief investment officer at Bokeh Capital Partners. Forrest wasn't particularly impressed with Apple's announcement. It's a product that's going to sell for $3,600. The competition sells for $350. So, I mean, everybody was really impressed by the technology, but a number of people said, well, so why do I need to buy this thing? Anyway, Forrest said that Apple's valuation hasn't been compelling for years, and you think from that she doesn't own it. And what Forrest said was, you buy it because it mints cash, it being Apple, and the gravitational pull of it in the index makes you need to own it to keep up with the markets. In other words, she's not a fan of Apple, in fact, doesn't like the valuation, but has to own it because otherwise the indexes would leave her behind. Here's a chart which shows you exactly what Forrest is talking about. This is Apple, a thin line, thin blue line, not opposed to a gray line, and this is the thick blue line, which is the S&P. As you can see, the S&P is sort of crawling upward, but it's being left in the dust by Apple. If Apple wasn't part of the S&P probably wouldn't be up. So what do you need to own to keep up with the index? Not obscure startup companies. You need to own Apple. So that's what's going on. And I think there's a handful of companies like this. Apple, NVIDIA. I did a video last week or a couple of days ago about whether you should sell NVIDIA. And I basically said, well, on valuation, yes, but on FOMO momentum? No. And there's another thing going on, which I've also talked about, which is that if the economy is indeed slowing, these are companies that are seen able to keep cash flow growing, not just get a ding from that. So these are stocks that managers and investors are owning, not because there's any sense that this is a great time to buy them, or because valuations are compelling, or the price is really good. They're buying them because otherwise the market leaves them behind. Now, this kind of FOMO momentum can last for a pretty long time, but at some point, the air between where the stock is and where the stock really ought to be on valuation it increases. It just grows, and at some point, that air gets so thin that investors notice, or something happens, or the economy as a whole retreats. And when that happens, these valuations collapse very, very suddenly. Is that going to happen tomorrow? No. But it is certainly something I would think about. I think riding these stocks for another couple months is a good idea. But certainly I would look to see if you get any indication that growth is slowing at these companies. And any indication is really a tough thing to say in this market, because what I'm hearing from Wall Street analysts is they're willing to look past the next quarter, the next 2 quarters, in terms of what they're valuing the stock at. For Apple, a lot of people came out and said, hey, this is not a product for the next 2 quarters, this is a product for next year. So I'm thinking that we're going to see, I being the analyst, think that we're going to see growth pick up for Apple in 2024, and we're willing to sit through sort of quarters in 2023. So it's hard to tell when the market goes, hey, we're not getting the growth that we're paying for. But as long as people buy the stock because it's got to be in their portfolios, because otherwise they're left behind by the index, this runs for a while. So thanks very much for watching. This is Jim Juback. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel, because that way you get notification when we do the next one. This is not a Thursday, but we normally do it on Wednesdays. So if you subscribe, and that's free, you'd get notification of when that is. For more free stuff, you can go to my Juback Picks free site. That will also have a Jim Extra 10 stocks for a core portfolio that I'm going to put up with this video, and you'll see a link to all that down below. You'll need to sign in to my jubackpicks.com site to get that. The site is free, signing in is free. All you're doing is giving us your email so we can market to you further down the road, to be totally honest. But we're not going to charge you any money for this. You're not going to give us a credit card number, nothing like that, just free. At least free in internet terms. We know what that means. And then if you want my paid site, that's Juback AM. That's got 6 portfolios instead of 3, including some ETFs and some even longer term picks. That's at Juback AM. Links to all that stuff down below. Thanks very much for watching.